On today's episode of the Cryptoverse. Good news. Bitcoin volatility continues to drop, and it puts it in range of mainstream assets like gold and fiat currencies. TunnelBear is the simple VPN app that makes it easy to browse the web privately and enjoy a more open and secure internet experience. Try TunnelBear for free by checking out the link in the video description below. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is Tuesday the 7th of February 2017. So let's begin with the market roundup before we get into the news. The biggest winner today, according to CoinMarketCap.com, is Iconomy, up 14.74%, putting a token at 51 cents. Now, I looked at Iconomy's website. I couldn't, when it was in the previous winner on a previous day, I couldn't quite work out what Iconomy does, but I've looked again and they've updated their website since. It looks like some kind of investment fund in the crypto world. So it says here like iconomy.index. It says, do you believe in the potential of the distributed economy? The iconomy index makes it easy to simultaneously acquire numerous digital assets. A simple one-time purchase is split into a selected array of digital assets representing 92% of the new economy. So there you go. It looks like a diversified fund that you invest in Iconomy, and then rather than trying to work out which of the cryptocurrencies is going to win or lose, etc. This looks like a basket of investments all in one. So that's very interesting. And I think I remember reading that Iconomy is built on Ethereum as well. So that's that. Now, 18th position by market cap is Dogecoin and is the biggest loser of the day. I don't really hear much about Dogecoin these days. It used to be solid in the top 10 most capitalized coins, and that was in the early days before a lot of the Steams and the Golems and the Waves and the Augurs of the world came along and started to give it some fierce competition. But I'm sure most of you have heard of Dogecoin. It's, to my mind, it doesn't really have much going for it in terms of unique offering to the marketplace other than its brand, its community, and the fact that it has a sense of humor. Right? Other than that, it's got a lot of competition for everything that it does, if you know what I mean. All of the other features of the coin can be done by other coins other than those three things. The brand, the community, and the sense of humor. So while those are very valuable things, the question is that enough to sustain it? Long term, I don't think so. Which is a shame because it was one of the original cryptocurrencies right back when, it was just a bootstrapping industry. So that's all for CoinMarketCap. Let's go have a look at the Bitcoin price chart. Bitcoin price data comes courtesy of the Bitstamp price feed, and the charting is done by bitcoinwisdom.com. Now, after my recent mistake reading the charts, I've started scripting this segment. And I always script the main news, but I did the chart reading off the top of my head until now. And this segment, now I'm scripting it, should be a lot snappier. But one thing that did occur to me when writing this first one was that it kind of sounds like I'm going to be reading the weather. You'll see what I mean. Like on the news, they point to the charts on the screen and then sort of interpret them. This kind of feels like how this is going to be. So far, we're on target for that 1124 that I talked about. And I've gained additional confidence from this by these three lows that are touching but not breaking the $1,000 mark. And the last time we were around $1,000, it wasn't as clean as this. Those three most recent candles are not ambiguous like they were back when we had that big crash and the big gain. These three most recent ones are clearly above the $1,000 mark. So those three touches, to me, a confirmation of support. So usually I look for three touches for confirmation. And then for confirmation that the uptrend is going to continue, we just need to look out for the break of the most recent high price. And in this case, that would be from the 4th of February, which is at a price of $1,044.20. Fortunately, today's high so far is 1,047. So that's a new recent high as far as I'm concerned, giving me that extra confidence that we are actually going to continue going up. A quick stopover at the SegWit tracker for the Litecoin network. Let's see what we've got. Total SegWit miner support on the Litecoin network is now 3.05%. That's up slightly from yesterday when it was 2.88% when I last checked it. So that's pretty good. It's an increment of 0.17% in a day. Having said that though, if that was the average per day, if 0.17% of miners were added every single day, I've just done a quick sum, that would take 570 days to get to 100%. But of course we don't need 100%, do we? We need 75%. And if I do that sum, it works out at 423 days. Too long. That's still too long. It would go past this timeout time at that rate, and then SegWit would not get activated. So the increase on a day-to-day basis, the average needs to get quicker. I mean, it's still early days yet, but just projecting that out, forecasting that long term, if it doesn't accelerate, it's not going to pass. I'm still confident it will pass, and I hope it does. Contrasting that with the Bitcoin SegWit tracker here, actually, I'm not quite sure when the timeout time for SegWit is on Bitcoin. I think it has a similar 1-year window in which to activate, otherwise it's formally declined. And of course, SegWit's been signaling for longer than Litecoin. But today, SegWit is 24% support on the Bitcoin network. And yesterday when we checked it, it was 22.7%. So that's an extra 1.3% of miner support. And you can also see the orange bar here, which is today's blocks mining that are signaling SegWit. It's actually even higher than that. So yesterday that orange line was signaling about 25%, and it's about similar today. So let's see how that pans out. In terms of the news then, today I've turned to bitcoin.com. This is an article by Justin Connell from yesterday, the 6th of February. The title of this article is This Key Bitcoin Indicator is Dropping Like a Rock. Now, I made the title of this episode of the Cryptoverse more specific than that because I got into trouble the other day for having a bit of fun with the title. You know, that episode about the Federal Reserve, but that's by the by. Now, I did point out at the time in that episode, and I'll do it again here, I said it in the comments, that if you're not a patron and thus having advertisers pay for your content for you, you don't really have a case. If your desire to avoid clickbait is strong enough, then become a patron. If you're not prepared to do that, then you'll just have to accept whatever strategies I have to employ in order to make a sustainable amount of revenue. Otherwise, there will be no episodes of the Cryptoverse for you to complain about in the comments. So that's that said. So let's go into the article itself then. So the article starts by saying Bitcoin volatility has fallen since 2011. And compared to the US dollar, it currently sits about 3 to 4 times higher than the Japanese yen, the British pound, and the euro. Ding, ding, ding. Fact check time. Has Bitcoin's volatility fallen? Well, let's see. Over we go to, wrong one. This is btcvol.info, which tracks the Bitcoin volatility. Now, I've set this on all time, and it goes from August of 2010 to February 2017. And just by eyeballing this, you can see that the volatility has a downtrend on the go here. So just at a glance, that would be yes, verification that Bitcoin's volatility is in fact declining. And that is a good thing. So then it goes on to say Bitcoin's volatility has fallen, now sitting at approximately 5%. For comparison, gold volatility averages approximately 1.2%. Now I believe these are daily figures, like how much does the price go up or down in a single day, okay? With regards to the comparison between like gold and Bitcoin and fiat currencies though, this is what I was referring to in the prologue about Bitcoin now coming into range of these mainstream assets in terms of volatility. The reason this is important, which I think is actually mentioned in the article later on, is that volatility in the 1 to 2% range is where more and more mainstream investors will start paying attention to Bitcoin, because it will seem as less risky but still have a potential for a return. In fact, it says here, investors generally limit exposure to volatile assets by not holding them or hedging. hedging Bitcoin is tough due to the dearth of options to short Bitcoin. Further, the more volatile an asset, the more expensive it is to hedge. Right, so a hedge is defined as balancing your investment money both ways in order to minimize risk. And most hedging in the mainstream world of finance is done through the options market. And an option is like buying insurance for an investment. You can buy insurance to protect you from the value of your investment going down all of a sudden. And all you're really doing is paying someone else to take the risk for you. And of course, the bigger the risk, the more they'll charge you to take on that risk. And if Bitcoin is swinging, plus 10% one day, minus 10% the next day, that's high risk, and hence it's expensive to hedge. So moving on, it says here, there are external factors which could contribute to currency pair volatility, like fiscal policy, geopolitical disruption, and other factors. This actually means Bitcoin's volatility will likely end up being lower than mainstream financial assets, specifically because the governance of the Bitcoin network is open and transparent. It's predictable. There's a high degree of certainty that something drastic isn't going to happen at short notice. Any changes to the system, we can see them coming. In fact, this is the gift that the Bitcoin scaling stalemate has given us. It showed us how safe the Bitcoin network is from sudden manipulation. We can check the SegWit tracker every day. We can check it every 10 minutes if we want to, every single time a block is mined. Those percentages we look at will update. And contrast that with the old world, where the whole investment industry waits on the edge of their seat every 3 months or every time the Federal Reserve has a quarterly meeting where they discuss interest rate changes. In that world, we don't have nearly as much access to raw economic data as we do in Bitcoin. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I will be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.